I am here in beautiful Tucson, Arizona at the Global Retailing Conference with Terry Lundgren, former CEO and chairman of Macy's. We got a big day potentially here, or a big several days for the United States as we talk about our relationship with China in trade. We know some high-level meetings are going on. What do you think the impact has been so far in the U.S. economy and the consumer from the tariffs that have been levied so far? And what does it mean going forward if all of that changes in some major way?
Well, you're in the right place, Courtney, because this is the Global Retail Conference, our 23rd at the University of Arizona tie-in with the Lundgren Center. And you've got Doug McMillon, you've got the CEO of Lowe's, you've got many CEOs, McCann, worldwide. They're all here, and they're all going to be talking about things like this. In my opinion, the U.S.-China relations right now are, they're having their conversations, and it's loud, and it's in the public. But the reality is our economies are just too important to one another for us not to get a reasonable deal that both sides can live with. So that's my definite full expectation with, I think, pretty high level of confidence on that subject. And I think you're going to see that just happen over the next hopefully next days as opposed to months.
The president's also been talking about closing the border with Mexico, and almost everyone believes that will have a strong economic negative impact on the United States. What do you think that means potentially for retail, for retailers located along the border?
Well, once again, I hope it doesn't happen. I think it would be my personal opinion, be a big mistake. We need to make sure that pricing is reasonable particularly for produce, but other products as well coming through Mexico. So again, I'm hoping that we're going to get some resolution there. I'm less certain about that one in terms of timing, but I certainly hope it happens very, very soon.
You know, Amazon lowered prices at Whole Foods this week on hundreds of items. And when that deal was initially announced, it sent shockwaves really around the world in retail, grocery, and in other sectors as well. But it doesn't seem that there's been a huge impact as far as market share with Whole Foods pulling in from other businesses like a Walmart, like a Kroger. Do you think that there is still some cause for concern for what could happen with Amazon in the food space, especially if they develop this new supermarket chain?
Well, look, here's the reality. Amazon got into the brick and mortar business, and they got into the brick and mortar business because they realized that as powerful as Amazon is, only 10% or 10.5% of all retail sales are actually done online. And so they wanted to make sure that they got a piece of that other 90%. So that was I thought it was a really good idea for them to get into brick and mortar, and I think Whole Foods was a good start. The reality is trying to compete with Walmart on food is a very difficult thing. Walmart's in every location, in every neighborhood, and you can't deliver food, as I think certain companies like Fresh Direct found out, from a warehouse. You're going to deliver it from stores that are in the neighborhood, stores that are local. That's because you want it fresh and you want it very close by for logistics reasons. And so I think they've got some work to do. But my guess is that there's got to be more acquisitions for scale if they really want to compete at the highest levels against somebody like a Walmart or Kroger.
Last mile is still very key to figuring that out. I believe Sarah has a question back at the New York Stock Exchange.
Yeah, morning, Terry. Thank you for being on the show. I just wanted to ask you about department stores in general, because if you look at some of the market action so far this year, the consumer looks pretty healthy. You've got retailers like PVH up 35% this year, Tiffany, Mattel, and then you've got Macy's down 15%, and Nordstrom, big losers. This is a good consumer environment. Why can't these department stores turn it around?
Well, Sarah, you're talking about stock price. The reality is Macy's did miss expectations, but they're up 4 quarters in a row, I think, or maybe more on comp store sales. And they have to get that right, by the way. They can't miss expectations. I'm not making that argument. But I am saying there's actually a lot of good news. I just saw that the Saks numbers came out. So many of the companies you talked about are luxury related. I know it's certainly what that I'm somewhat aware of is that Bloomingdale's business, the higher end, has been good. So there is some demand there. I think it comes back to supply and demand. And in the luxury sector, many of the ones you talked about, they're already pretty much set. There's not an oversupply of Louis Vuitton handbags. There's not an oversupply of high-end retail stores. And that's not the case with retail in general, where there is an oversupply. And you're seeing that correction. Many announced. I think Signet was on your show yesterday talking about that in the jewelry sector. And so that's all shaking itself out. That middle market has to rationalize itself, and that's going to take a couple of years to do so. When it does, Sarah, there's going to be lots of growth and lots of opportunities for those retailers to get through this next couple of year period.
So you're saying there's actually good news on the department store front, but investors are just not giving the stocks the benefit of the doubt yet?
Yeah, last time I checked, I think the price-earnings ratio for Macy's stock was about 5. I think the S&P is about 20 or something like that. So I think there's opportunity, but frankly, there has to be confidence. That's it. There has to be confidence, and there will be. I think this management team is solid. I think the team is excellent. The strategy is good. So it's just going to be a matter of putting points on the board on a consistent basis. I believe that will happen.
Terry, Target announced the next step up in their wages today, moving to $13 an hour next month on their path to $15 by the end of 2020. Amazon, we know, is already paying $15 an hour for a minimum wage. Do you think that all retailers are going to have to continue to move higher? And frankly, can they afford to do that? This is a tight labor market. You have to offer some kind of incentives to get the right workers. But when you've got margins that are crunched, can they do that?
I've always believed that gradual wage increase is a good thing, not just for workers, but for the economy, because you're going to put more money, more cash back in the hands of more people. When that happens, consumption will rise. And so I believe that over longer periods of time, this is a very good thing. What's a mistake is when you have certain politicians saying you need to jump everybody immediately, double the minimum wage and the like. You're going to put people out of business if you do that, and you're also going to lay people off when you do that. It just doesn't make economic sense. So there has to be some of the announcements that you just described, that Target, Walmart has made similar announcements, others have as well, of this gradual increasing of the minimum wage, and I think that is exactly the right answer and good for everybody, the economy as well as the workers.
There's actually a lot happening in New York City when we're talking about retail. We've got the new Hudson Yards complex. Nordstrom's going to be opening their women's flagship store soon. The men's is already open. A big makeover at Saks Fifth Avenue. But then you've also got Lord & Taylor closing its doors and the Saks location at Brookfield
and
closing.
A lot of holes in Madison Avenue and Fifth Avenue stores as well.
Right.
And Soho and the like.
And the international tourism is down.
Yes.
So what's going on with retail in a very key city like New York, where these companies, frankly, are spending millions and in some cases billions of dollars to build?
Well, I think New York is pretty different and pretty unique. What has to be happening there is that they have to be recognizing that without tourism, it's very complicated to make this model work with all this additional retail coming into play. What's happening in New York is not happening around the rest of the country. It's a unique microcosm of all of these various factors of people from all over the world shopping, people from America shopping and coming in to shop. But honestly, I think you can't look at this and how things are working right now. If you talk about Hudson Yards, the largest construction project in the United States, they're looking at what's happening in the next 10 years. And that's the only way you can justify this expansion, and frankly, in my opinion, in New York City.
Just to wrap things up, let's just hone in on the U.S. consumer. What are your expectations for the year going forward? Still a lot of fears bubbling about if the good times are over.
There are, but, I think I just saw that unemployment claims were the lowest since 1969. So there's a lot of good about this economy. There's a lot of reasons to feel positive about the consumer. And so, in my opinion, it's just going to be this shakeout that has to happen when we get supply and demand back in line, Courtney. But I'm very, very bullish and very positive on those who have a strong balance sheet, that once they get through this period, there's a lot of opportunity ahead.